Yo. Good morning, everybody. I'm done trading for today. I think our draw is higher. But I'll just be here to live tape read with you guys. And I think pretty clean setup this morning, I'm not gonna lie. Good morning, everybody. Let me just post this really quickly. Good morning, Jomar. Good morning, Inexorable. Good morning, Doug. I've annotated everything you need to know right here. This is everything you need to know. Nice, Zach. Good stuff. All right, so we're at 50 people, so I'm just gonna get started on this morning. So yesterday in the live stream, for those that were there, I was annotating that this fair value gap was the one I wanted to see reacted to. Unfortunately, we didn't get that, and so we just kind of ran higher. And so in terms of that, like, we still got 1 hour trade yesterday, and I didn't plan to trade anymore, but then this would have been catching that daily range right into this first objective right here. And so what I'm expecting as of right now is this high on the left. We can expect price to drive up there. I think that's the ultimate draw right now, all-time highs again, right? And so from right now, this morning when I got to my desk, I was like, yo, this is like the best setup I've ever seen in my life, right? Like this is like textbook setup. We have an hourly fair value gap, accumulation, manipulation, distribution, right? So then dropping down to my 5-minute, I can see referring to that hourly fair value gap, we get SMT divergence down here with DXY. And so we start putting in bullish price action. And this is how you can gauge chasing the market efficiently. Okay. So a lot of people, when they're chasing the market, they don't know specifically what to look for. But once your setup is playing out and you know what your setup looks like, that's when you have high confidence in chasing a setup, if that makes sense. So here I just took a quick 3.13R trade because that was just to pass my evaluation. If I were to actually target something, it would probably be this high, right? That would be the ultimate draw. So from this morning, I saw, okay, so we're trading into an hourly fair value gap. So what is my model's checklist? Once again, higher time frame PD array. 2 is that SMT divergence, and 3 is lower time frame structure / entry. Okay. And then 4 is trade management. So right here, we had all of these things start presenting itself, right? So we can look, okay, so check higher time frame PD array. Okay, what's the lower time frame relative? It's a 5-minute. So we're going to be looking for SMT divergence within this higher time frame PD array, right? So I found SMT divergence with DXY, and I already saw that we were putting in bullish price action, equal highs up here for a clear drawn liquidity, market maker buy model, right? So just like the lecture I released yesterday, my model is right here. It's just looking for that higher time frame PD array, or higher time frame internal range liquidity, if you want to say, and then higher time frame external range liquidity. So we're creating that market maker buy model right here. Okay, so from it, this would be an internal range liquidity to external range liquidity trade, right? Because we're trading from a PD array. Looks like trading pre-market was the move. Yeah, you had during London kill zone, there was a perfect setup right here. But once again, if you understand your setup, you'll be able to efficiently chase your setup. And so if you really take a look here, once we took that high, you can start looking for accumulation. So here was a lot of high resistance liquidity. So I understood that once we got SMT divergence, I can enter here. This low was an SMT divergence, right? With this low, once we're trading into this fair value gap, so I entered here. Stop loss below this order block, candle body low, and this right here is actually a unicorn model that I entered on, right? So we have a low, a high, a lower low, higher high, creating that unicorn model right here. Why is this valid? Why is this unicorn model valid? Is because we have SMT divergence over here, right? And so we're looking for quick displacement away from the unicorn model if it is true. And on top of that, I have SMT to support my idea that we're going to go higher. So I want to see quick displacement, and so that's what we got. And once again, it's just knowing your setup, then you'll get this, like you get this on repeat, right? So the main things I studied when I'm developing my model, I was like, when does the market expand? How can I filter out all the noise and focus on just what I need to? And so this is what it came down to, is just a higher time frame PD array, SMT divergence, lower time frame structure, entry, and then fourth is just trade management, right? You always have to have that risk management. You have to know what you're looking for. And so I've seen this setup play out so many times that I now efficiently know that I don't have to catch the bottom. I would like to catch a bottom, but this happened when I was asleep. So watching the market now, I can see clear drawn liquidity above these highs, clear drawn liquidity above these highs, market maker buy model. So that's pretty much just once again, that's the video I released yesterday, right? It's literally my model right there. So with these annotations, you can see how clean this trade was. What time do you first get at the charts? Personally, my kill zone 8:30 to 12. What's yours? I wake up at like 7. I usually wake up like 6:30 or 7, and then I'll just, do my thing, like my morning routine and stuff like that, and I'll just check 7:30 because 7:30 is the true session open, right? So So 7:30, I'm just looking at the true open. Where are we in relation to it? What's my bias today? I think we're bullish, and honestly my target has already been met, like in terms of this setup. So if I'm looking in terms of like today overall, I think that we could be reaching for all-time highs already. So I think we're bullish, to be honest. Very inefficient price delivery here though. I'm definitely gonna say that all of these inefficiencies down here are 100% going to be revisited eventually. So this is the 7:30 a.m. open. We want to buy below it, right? So I just want to show you guys one more thing, and you guys don't have to use this, but guess what's right here? It's a new week opening gap. Even more confluence, right? So this validates this breaker, this validates the true open, this validates this unicorn model setup. Just very, very high probability setup right here. Right, because the new week opening gap, new day opening gap, those are time-based PD arrays. That's why it's so effective. Along 62 and closed early when price pulled back. TP was previous day high. Honestly, it's fine, Meeks. It's just you had the right idea and take that as a win. That's all I gotta say is take that as a win because you had the right idea. Journal it. Does unicorn model have to be 9:30 to 11:10? It doesn't have to be there, but it's just a good mechanical rule to have because that's after the 9:30 volatility, which is usually either a Judas swing or a displacement in direction of the market. And so at 9:30, once you create that unicorn model, it's usually going to be high probability because you get that displacement. And that's why in my mechanical entry model, I put 9:30 to 11:10. On top of that, you have multiple macros occurring within that time window, which makes it high probability as well. But once again, I think that if I were to focus on anything, it wouldn't really be sticking to a mechanical rule rather than understanding. If once you understand higher time frame narrative, you can enter anywhere, right? Just as I said in my lecture yesterday. You show where you saw SMT divergence. This SMT is with DXY. So as NQESY is making higher lows, you can see that DXY right here is making higher highs. Let me try to apply. Okay, there we go. So you can see right here, right? So this is a lower low, but then DXY is making, oh sorry, this is a higher low and then DXY is making higher highs. So you can look right here, SMT divergence right there. How much money do you think is appropriate to generate every month until you can consider dropping out? It really depends on where you live, in my opinion, and it depends on your circumstances. So my opinion is, for me, I went to university for like 1 year, and after that I was just like, yeah, this is not for me, because I was originally studying to become a pilot. And I was just thinking about it like future proofing wise. It's like I'll be away from home for a long period of time, stuff like that. Even if I make good money, I can't even spend it on people I love. So it's like, what's the point? You know what I mean? So I decided to drop out, and I was pursuing trading at the time. And so I just like, you know, I put my heart and soul into trading because one, I love trading. It's just, you know, I've always loved video games. So trading to me is just another video game. It feels like a pattern recognition game, you know what I mean? And the quote unquote points you get are like real money, so why not, you know what I mean? And I've always like accelerated every game I play, so that's how I kind of thought about it. It was like whenever I play, okay, so because I've been playing video games for so long, I'm like generally pretty good at video games in my opinion, because I used to compete a lot. So I would just like, I would be like, okay, if I'm the top percentage in the games I usually play, if I treat trading like it's another video game, just an analytical game, then I can be the top percentage of trading. And that's how I think about it. I don't know if that's a good mentality, but that's how I think about it. It's just another game. Right? Because I like back then, like for example, for Valorant, I don't know if you guys heard of Valorant, like I compete in that game, and I coached other people how to play. And so I'm kind of just like translating that skill into trading, where it's like now I'm like competitively trading, quote unquote competitively, trying to be the top percentage, and then now I'm quote unquote coaching new people and trying to help others. So, oh, sorry, I'm so sorry, I completely deviated from your question. So I would say, like, in terms of like monthly income, it's like I don't think your sole income should be trading. And the reason I would say that is because trading isn't like a linear growth kind of thing. It's very unexpected. It's throughout a year, like a trader's best profits will mostly come from like 1 or 2 months, for example. And that's something that I've like been told a lot of times and read up on. It's just like the best traders, like their gains come from like 1 or 2 really good months of the year, if that makes sense. So it's just you know, you just got to think of it like that. So it's like if you need to pay rent, for example, you need to pay for food. Let's say you need $4,000 per month, okay? And trading's not going to guarantee you $4,000 per month. So you have to understand that. So it's very good to have some sort of cushion. So for example, right now I am I'm about to start a partnership with Casper SMC on his smart trading blueprint to make content for him. And so that would be a cushion towards what I can do now. So my trading, why am I so relaxed when I'm trading? Why do I have no stress when I'm trading? Is because well, first of all, I've already learned from my failures, but number two is now I have that cushion. I don't have the need to be like, oh, I have to make my ends meet. I have to trade today. I have to make this amount today, right? I don't have that urgency. And so I can just be laid back. I'm like, my setup's not there. I'm not going to trade. And that's just how it is. So you have to find that balance where it's like, are you having some income from outside of trading so that you can be comfortable in trading? Does that make sense? I hope that makes sense. And so that, like, if you want to drop out, then that's when I would say you can drop out. But once again, I would say it also depends like on your circumstances. Like, are you like 3 out of 4 years in university about to graduate, right? Then if that's the case, then just finish it because you're almost there anyways. Ethan, you don't trade forex? If yes, what model you using to trade it? So I don't trade forex, but when I do analysis, I do the exact same way I do in index futures. And yeah, that's just for anything, right? It's like my model is universal. It's just higher time frame PD rate, SMT divergence, lower time structure or entry, trade management. That's this model right here is universal. It's universal to any asset class. But if I were to recommend any asset class to anyone, it would be definitely index futures. What do you think about 930 manipulation? I don't know. What do you mean by that? Like 930 will usually get a liquidity run and then we'll go in the true direction. Other than that, not sure. Like, are you asking me what I think it's gonna happen today, like for 930? Because if that's what you're asking, that's not something I need to know specifically as of right now, right? Because I'm pretty much done trading for today. So honestly, I'll just type it on screen. And that's it. That's my trading rule, is 1 win, I'm done, and then 2 losses, I'm done. 1 loss, 1 win, I'm done. This SMT is on DXY. You guys gotta look on DXY. Question: Wednesday manipulation of the lows for standard deviations was the all-time high target. Market maker buy model. There was never a additional entry you like, or were you away from the charts? So on Wednesday, I was okay. So I was annotating this. I don't know if on Tuesday I told you guys in the free stream or it was like during the paid stream that I said that this low. Essentially, I was annotating on my weekly outlook that this low is what I'm looking for, and once we take that, then we can take a look at ES and YM or some sort of SMT divergence. So you can see that we got a massive SMT divergence right here, and so from here we can start looking for some choppiness because that is the market maker sell model completed, right? So higher time frame objective means some choppiness you can anticipate for that. And so from here, once we got this massive displacement up, I'm now looking for that market maker buy model. And so I would just draw up one manipulation like that. And so that final objective all-time highs was that -3.5 to -4 standard deviations, right? And so yesterday in the live stream, I was telling the Discord members that right here, this inversion gap is within this -2 to -2.5 standard deviations. So my expectation for yesterday was actually trade down to this hourly fair value gap first and then run higher. So this is what I wanted to see, but we didn't get that. So yesterday I took a short, I got +1R and then stopped out break even. So just, you know, it is what it is, but we got our trade today, so it's all good. Okay, I need to like catch up on chat. There's so many chats. You guys are so active today. Okay, can do it all-time high then drop low. I think that's valid. Anis, are we about to get another entry? I don't know. I am done trading for the day, but I'll be tape reading this for you guys. That launch was also off the 7:30 true open. Yes, it was. A lot of time-based things taking place here. So my entry was also based on the new week opening gap, right? Unicorn model, SMT divergence, 7:30 true open, and then you have your daily true open, right? Your day true open, we're below all of these things. Everything's just pointing up. Okay, so something to look out for. Okay, where was I at? Morning, if I were to start learning trading today, what would you recommend I start with? Honestly, this is perfect because I was about to, I would say like learn the basics first, like how candlestick charts work and stuff like that. But my mentorship that I'm working on right now that I'm going to release on YouTube, it covers everything from beginner to what I know now. So it's essentially like episode 1 will be like I cover trading psychology first so that your mindset is like ready to get into this, right? And then after that, number 2 is just like a trading view tutorial. Number 3 is like what kind of charts are there, how do you read a candlestick chart, then what markets are there, stuff like that. So it's literally like a complete beginner to what I know now. Didn't know you looked at DXY for SMT on indices. Yes, I look at NQ, ESY, and DXY. We have another SMT lows higher time frame. So that would be bullish, right? I'm assuming that you're talking about this one because I'm pretty sure this right here is also another SMT right here. I just didn't annotate it. Same reason I didn't pursue flying as a career. Oh, that was way back. Yeah, I agree with that, Zach. When you dropped out of college, were you a profitable trader already? I wasn't profitable when I dropped out. I just dropped out because I wanted to pursue entrepreneurship. And I mean, I definitely very blessed to like have that kind of support from my family. And you know, now I'm just trying to give back. Wanted to be home and have kids. Yes, exactly that, Zach. I want to be home for my kids and my significant other. I was only feeling like I'm playing a game when trading. Yeah, a lot of people like it's just a video game. Yeah, at least 1 year saving to go live, but going full time is definitely my goal. Don't want to be doing work and trading forever. You don't want to be trading forever? Or you don't want to be working and you want to trade forever? Sorry, I brain farted there. You're on your first year? Yeah, so I just stay. Okay, I would stay in school until like you feel like you're prepared to, you know, commit to trading and you have some sort of income or financial stability. And if your family is able to provide that to you, then you have to, even if you drop out, you have to like kind of be honest with yourself and take the shit serious, because trading is not easy. It's simple, but it's not easy. And like for everyone that gets into trading, you just have to accept that trading is the hardest thing you could get into. It's like literally the hardest profession. To be a much better trader, must faster without the pressure. I'm assuming you're saying much better trader without the pressure. Yeah, I agree. So it's just having that cushion. Good morning, Daniel. Sorry for saying that so late. What platform do I use? I use Apex Trader Funding because they're cheap, not because I trust them. And I use TopStep because I trust them. Need help with spotting potential setups? Just watch your video yet from yesterday. Rewatching your one setup for life, but I'm still learning, trying to get familiar with it. Yeah, so that's just something you have to backtest, right? So you can watch the backtesting stream inside the premium. Since you're in there, just keep watching that over and over, and that's how you would annotate, right? You just look for a higher time frame. You have to look for a higher time frame PD rate, SMT within the higher time frame PD rate, lower time frame market maker model. And that's pretty much it, right? So what I annotated yesterday is what you should be going to your chart to find. Does that make sense? And then the more you do it, the more you get comfortable with it. And that's just how it is. It's like when you learn something new, you're going to be uncomfortable with it, but the more you do it, you'll become comfortable. And I don't say that to put you down, Meeks. It's just I need you to like get into your charts and get into it. Does that make sense? Like, it can't be me showing you every single setup, if that makes sense. I've learned an easy way to calculate position size for. Is it very complicated to calculate position size in futures? No, not really. I just calculate based on points and contracts. So it's like for NASDAQ, I pretty much only execute on NASDAQ. So it's $20 per point per contract. So let's say I'm doing 10 points, then, you know, that's like, you know, 10 points, one contract, for example. Then you just multiply 10 times 20. Or if you're doing 2 contracts, then you just do 2 times 20. Right? And then you just position that way. If anything, like you just use the long and short tool, you double click here and it's like, what's your risk that you want to set right now? Okay, well, if I'm let's say I want to risk $1,500, then my stop loss, I want to put it here, and my entries at price right now, so I would put 2 contracts. And that's just like, that's just a really, really like quick way to just do it. I've learned to use it. Okay, I just read that. Good morning, Ethan. Do you have a yearly subscription for your Discord? If so, when will you have a sale? So as of right now, I'm doing like a free trial for the first 100 people that join, and I think there's like 30 spots or something like that left. As for like longer term plans and stuff like that, I was planning to do that, but as of right now, it's like my main focus isn't to actively promote my Discord. Okay, like that's just something I'm doing to help those that want to get extra help from me. um my main focus right now is just growing my platform and releasing as much content and value. I want to provide as much value as I can right now. That's like my main goal. So like, once again, that Discord, the premium Discord, like you do get benefits from it, but it's completely optional. I don't want to make you guys feel like you're missing out a whole ton because you're not in there. Like there definitely are benefits, but you're like, you know what I mean? It's like I'll do pop-up lives on YouTube sometimes. Like today, like I'm just doing a random pop-up live, or every Tuesday I have a scheduled stream for 9 to 10:30. So, you know, and then if you know what I mean, it's just like, do you want more time to self-study, or do you want more time like with me, like talking and stuff? I guess. Can you take us through how you trade crypto? I know you said you use weekly to 4 hour, but love to see the process of bit. Okay, I'll look at Bitcoin a little bit. Do we get a TGIF setup today? I don't think we're gonna TGIF setup just because the final objective hasn't. Oh wait, it just been met. It was literally just hit. So if we get some sort of structure to go downwards, then I would look for that TGIF setup. That's valid because we just took all-time high again. Would you prefer fair value gap or order block? I prefer gaps always. So balance price range, inversion gap, fair value gap. I prefer those. You think you didn't show us the pink Porsche after yesterday's trade? Oh yeah, no. Shout out to Daniel. Get me a sick paper trade signal, you know? Made like 200 hypothetical money. 200,000 hypothetical money. I think I got in the same trade around 530 already. My R was 3.55, but I've been in this trade very long. I see yours was much quicker done. Do you have tips to get in on a lower time frame? I would say, once again, you have to look for so this is a problem I used to have as well. As like I would enter on a trade and it's just like high resistance liquidity. I'm like, oh, it's so slow. I don't even want to be in this anymore. And so what mitigates that is SMT divergence. So every time you get SMT divergence, you should be looking for displacement. So we had SMT divergence right here. We get displacement, if that makes sense. So SMT is your friend. Okay, whenever you're in direction of your trades, like after SMT occurs, you're looking for explosive price movement in your direction. Right here, this is a breakaway gap that I was looking at. If you guys were wondering, it's because we have an RDRB right here, so that would be a breakaway gap. And so usually if breakaway gaps stay open, you see price also expand very quickly. So another thing to look out for. Okay, sounds good. I'll check my DMs after. Laura. Sorry, I'm not sure how to pronounce that. Lore. Fair play things. What's your analysis for Bitcoin right now? I'll take a look in a bit. I'll practice. All right, perfect, Meeks. That's what I want to hear. But once again, these live streams, like whenever I'm tape reading, it's like it's supplementary to your learning. Like my lectures is where you should be learning the most. These live tape readings, like streams, it's like giving you thought process in real time and stuff like that. But to actually learn what I'm doing, what I'm using, is from the lectures. It's good to be part of a trading community, be socially involved with other traders. This can be a lonely career. Yeah, 100%. So before I joined Smart Trading Blueprint, man, my journey was so freaking lonely. Like whenever I blow a challenge or something, I'd be like, oh, I can't do this. Like nobody understands our pain. You know what I mean? It's just like there was a time like last year where I was just like so down. I was like, bro, I'll never make it. Like I can't do this. Like, why am I so inconsistent? I can't do, you know what I mean? And I just kept telling myself that. It's part of every trader's journey, and you know, it just is what it is. You know what I mean? You're there right now, friend. Yeah, that's why I was saying, like, every trader goes through that. And if you haven't, I'm sorry, but it is coming eventually. It's coming for you. But you know, if you ever feel that way, you just gotta remember, it's like every trade is its own trade. Sometimes you have off months, you know, off seasons. And when you have your best season, that's when you make back your gain, like make back your losses and more exponentially. Hi Ethan, do you think that ICT could be used as accurate as what indices are? I'm not sure what you mean by that question, but if you're asking what ICT can be applied to, I would say it can be applied to any market. Do we look for short today after buy side taken, or is this going straight up? Do we try to trade with the trend rather? So right now is kind of, I feel like the trade's been had today, and so right now what I would do is just I'd wait and see. Okay, you can either use the hourly chart or you can use the 4-hour chart, for example. Let me take a look. Like you just want to kind of see, is this manipulation or displacement? If we get displacement higher, then I would assume we're having a bullish day, and that's just what I'm looking at right now. Especially looking at the 4-hour, it just looks like a clear expansion higher from this 4-hour PD array. It just looks extremely bullish. So I'd say I'm leaning more bullish than bearish as of right now. What's my normal position size? It deviates. My position size deviates based on my stop loss. If you potentially enter trades from 7:30 onwards, how would you navigate through news releases at 8:30? Also, if you start trading at 7:30, what time do you finish? I remember customers saying something like 7:30 to 10:30. Curious what. Yeah, so I look at the markets from 7:30 to 10:30, but that doesn't necessarily mean I trade. It depends on the 8:30 news as well, right? So it's like, just like yesterday in the stream, I was telling, it didn't play out the way I wanted it to, but yesterday, was that here? Yes, those here. So yesterday it was like we had SMT divergence on the highs here, and so in the Discord I was telling people, this is where I took my short, by the way. So this looked like a very clear market maker sell model to me, and this would be that hourly fair value gap, right? And so we had massive SMT divergence on the highs here, and we had another SMT divergence here. So right here on this fair value gap, that's when I wanted to enter the market, I believe. Yes, so somewhere around here is where I entered, and so I was looking for this low, and then this is where I closed my position pretty much, because we just displaced through it. Oh wait, sorry, right here. That's where I closed my position for like 1R when I was targeting 6.5R or something. I don't even remember what I was targeting, but that's where I closed it for like 1R. Actually, maybe I entered here or something. It was a very like impulsive trade, just because I was watching price action. I'm like, wait, this is clear as day. Where if we have SMT on the divergence of the highs, then I already know that these are protected highs, and we've already had manipulation in the market essentially. So we can expect news events just to be in an acceleration in price. And so right here at 8:30, once we got here, I was expecting price to just displace down to this low, but we never did that. So I just ended up taking 1R. I have some other examples in my trade executions on my Twitter where I'm like, price is just going to accelerate here. No need to revisit these lows or highs, for example, because it's just because I know that manipulation has already occurred. community definitely my favorite part of smart trading blueprint. Yeah, I love smart trading blueprints, like family. Apex Trader, which plan do you use, Rhythmic or the Trade of 8? I use Trade of 8. And then I have some Rhythmic accounts. The reason I use Rhythmic is because on Ninja Trader I have Replicanto, which is like a trade copier, so I can just copy however many accounts I need to. For us right now, 1K count will go from 800 to 1200 and just ping pong. Do you mean your account is just like stuck in a range? Is that what you mean? Sorry. We got objectives met, so would you look for TGIF here? Yeah, I feel like I would be looking for a TGIF, but I need to see structure before I can really assume that. Very clean AMDX today. Yes, very, very clean. That's why I took this long. Like this morning, when I got to my desk, I couldn't believe my eyes. I was like, yo, is this as clear as I'm seeing it, or am I like missing something? Like, no, this is obviously bullish, right? But why are we getting high resistance liquidity run higher? And so I was like so confused. But I was like, yeah, this is clear as day, so I just took a long. Structure on what time frame? It depends what your higher time frame is. So if I'm using an hourly fair value gap, right? And so this is where I blend time and price. Can you explain SMT like I'm 5? Yeah, I got you. I'm gonna answer the previous. So it depends on your higher time frame. Once again, it's just like if you're using the hourly chart, then I'd use the 5-minute, and I also blend time, which is quarterly theory. And so we're looking at the sessions quarters. Let me annotate that. Right? So that makes it a little clearer. Within this phase right here, we're expecting distribution already. So the fact that we got SMT divergence right here is telling me that manipulation has occurred already. And so what I tell people in the Discord is whenever you do your annotations for SMT, you can also put manipulation substitute. Okay, because that's essentially what it is. Markets being manipulated in a different market, a correlated market. Okay, and so that's what I put in my annotations. It's a manipulation substitute, and so I can look, so AMDX, right? So I'm anticipating that if this creates SMT divergence, that's quote unquote manipulation already. And so the one that fails to make the lower low is most likely going to be the more volatile one. And I don't want to confuse you guys too much, but once again, it's like if we're using the daily quarters, then you can see here it's a very, very clear accumulation, manipulation, distribution, right? So if we're trading the New York AM session, we're going to be paying attention to the immediate higher time frame cycle, which would be the daily cycle. And now we drop down to the session cycle. Okay, I hope this is making sense so far. And so we understand that during the session cycle, we're expecting higher prices already, and that any manipulation during this Q2, because Q1 is accumulation, if we get that manipulation below these lows, then we can expect higher prices. We got SMT divergence, even better, volatile price higher. Does that make sense? Like it's just blending time and price together. And that's, once again, I taught that in the video yesterday, the daily quarters, and that's what you could have looked at. So if you're just looking at the daily quarters, for example, you would have got a nice trade too, right? So once again, we have our daily quarters. And so now you can ask yourself, where is the consolidation taking place? Okay, well, right here, it's very obvious that we're getting consolidation during Asia session. So that would be setup number 1, right? Asia consolidation. And so now we get a manipulation of time-based liquidity right here, right? Time-based liquidity manipulation during London session. And so we start seeing distribution during New York AM. We're looking for higher prices during New York AM. Does that make sense? And then we're now blending that with a higher time frame PD array, SMT divergence occurring here, objective right here, all-time highs right here, long-term objective. Does that make things very clear here? right? Accumulation, manipulation, distribution. So I really hope that makes it a lot more obvious. And then from this point, you can look time-based manipulation, right? So this happened during London session, so we can draw low to high. What do you know? We hit that negative 2.5 standard deviations, and we're, you know what I mean? -2 is that all-time high, right? So tell you guys, not random. Market is not random. You just have to study. You just have to study. When you study, market is not random. When you don't study, market is random. That's just how it feels. But yeah, there's my model right there. I literally just showed you guys what I taught you guys yesterday in that lecture. So if I were you guys, I just annotate that, and then you guys can annotate that and then screenshot it, journal it, and then just keep looking for the same setup to recur, and I promise you'll find it a lot of times over and over again. Here, I'll type it out. Sorry guys, I'll type it out so it's less confusing. SMT with DXY. I'll show you guys entry. Okay, I'll look on the 15 if there's an entry. So once you are taking out that liquidity, you're just looking for balanced price range, ICT 2022 model, for example. Look for your unicorn model entry. It doesn't matter what entry model you're using, because now your higher time frame context is in alignment. This hourly fair value gap is also a 4-hour fair value gap. So the fact that I'm using the 15-minute chart here, it doesn't change anything. It's still in alignment. I just want to clear that. And so right here, you can just look for this inversion fair value gap right here. That could be an entry. You look for a balanced price range. Do we have any? We don't have any balanced price ranges. We don't have. Yeah, so the only entry you have is the inversion fair value gap, which would be either this one or this one right here. Then price really sent it. Okay, so now you guys want to pay attention to this high. Why is all-time high important right now? It's because it's a time-based liquidity level. So the main thing you want to be focusing on is time-based levels are where market maker models will likely stem from, and that's when you're trading from external range liquidity to internal range liquidity. And so you want to see, does that level act as support or resistance, right? So if we're trading above it, we want to see support. If we're trading back below, we were some resistance, and then that could turn into a market maker sell model. Yes, friends, I'd be interested in a TGIF setup right now. So if we're doing a TGIF setup, I would, right, go on the weekly chart. Damn, this is a big weekly range. We're definitely going to get a top wick, I'm pretty sure. Okay, so now that we're here, we can go to the 4-hour, for example, and so we can look, where's my projection? All right, so we can look at these PD arrays right here. If we trade back, that would be the retracement of the week, which is very possible. So you could look for that. That could be your trade idea, because we took that objective. Oh, I need to explain SMT like you're 5 years old. SMT divergence is essentially looking at correlated assets and Let me pull up the screenshot. All right, here you go. So essentially, you're just looking at correlated markets and you're looking for one of them to fail to make a new swing. So it's essentially, so if we're looking at index futures, we're looking at NQ, YM, ES. You can also look at DXY, but just to save some confusion, I'm not looking at DXY because DXY is inversely correlated. And so we're going to look at index futures like NQ, YM, ES. These are the three ones, the three you're going to be looking at for indices. Then when NQ is making a higher high, for example, YM should be making a higher high and ES should also be making a higher high. But when one of these asset classes, in this example, ES is failing to make a higher high, that's SMT divergence. That makes sense. Vice versa, it's like NQ making lower low, YM supposed to be making lower low. That means ES is also supposed to be making lower low. But in this case, or in this example, ES fails to make the lower low. And so we can expect that as SMT divergence. Oh, I have to go to Bitcoin. I forgot. What's going on here? I haven't looked at Bitcoin in a while. So what I would say is on Bitcoin, what I'm expecting right now is we just had a massive expansion. So I can see us just going kind of sideways, like sideways, some sort of manipulation, right? If we're going lower, then that's really what I'm expecting. Accumulation, manipulation, distribution, and vice versa. We could be going sideways. If we're going higher, then accumulation, manipulation, distribution, higher. I think that Bitcoin definitely is going to go lower first, though, in my opinion. Like, either way, it has to go lower first. And that's my opinion. Not saying it has to, but in my opinion, like, I want it to. You know, I don't want to mislead anyone, so. So if I'm looking in terms of weekly to 4 hour, the reason why I love the weekly to 4 hours because internal range to external range is just like so flawless on this time frame. Right? External range, internal range, external range again, and then we go back into internal range, and then external range, and then we go back into internal range, and then now we're going to external range again. So that's why I'm expecting lower prices is internal range, right? So it's pretty great. I love that. And so I just apply, I look for internal, external, and then on the 4 hour, just look for a market maker model. How would SMT look with DXY and EU? So they're inversely correlated. So let's say, okay, you would want to look at GU. I don't know why I just did that. That's terrible. Okay. So you could say this is EU, GU, DXY. And so from here, I'd just be looking EU. When EU makes a higher high, GU should be making, what did I just do? GU should be making a higher high. And then DXY, if it make it, oh wait, I got it. We're looking, because it's inversely correlated, we're looking for the lows now. So if EU is making higher high, GU should be making higher high, and DXY should be making a lower low. But in this case, if it doesn't make that lower low, then we can look at that as SMT divergence. Vice versa, if EU is making a lower low, then GU should be making a lower low, and DXY should be making a higher high. But in this case, if DXY makes that lower high, then you have that SMT divergence. They're just upside down. One thing you can do if you want is go to your DXY chart and just invert the chart, and then you just look at the highs with the lows, and that makes it a little easier. I used to do that, but now I don't do that anymore because I've just gotten used to spotting SMT divergences. Daily quarter time for Forex, it's the same thing. Exactly the same thing. TGIF to 20% is a massive drop, isn't it? Yes, it is a massive drop. It's like 200 points or something. I'm not saying it's gonna hit it today, but I just think that we're bearish. Oh, we're dropping. I think that like from this level we can see bearishness, and there's a lot of low resistance liquidity run here, so I wouldn't be surprised if this gets run out. So let me just delete some of these annotations. And so this was the all-time high draw. The all-time high draw on liquidity has been met. And so from here we can anticipate possibly some sort of market maker sell model, because it's time-based liquidity, right? Another thing that I've said before, what does high resistance liquidity breed? Low resistance liquidity, right? So what is all of this? Low resistance liquidity. There's also a SMT on the highs here on the lower time frame. I'm not going to drop down to a lower time frame because to save you guys some confusion. EU and GU has SMT now. Man, I would look at that, but I don't want to I don't feel like looking at Forex. I really don't. I'm sorry. That's just something I don't want to do. I don't want to look at Forex. You know what? I'll do it. I'll do it for you. All right, here we go. Oh, oops. Okay, let's set up our chart like this. All right, and then this one DXY, this one here USD, GBP USD. What's going on here? All right, let's look at our daily chart. Man, this looks horrendous. All right, I think GU is obviously gonna go for like at least some sort of high up here. I feel like it definitely is. This looks like trash to me though. This actually looks terrible. This also looks kind of trash to me, but at least here you can see some sort of direction, and that's pointing downwards. And DXY has not been the greatest, but I still see this as a massive market maker buy model overall. And we are in a monthly bounce price range, or fair value gap, I forgot. So on the daily, if we get displacement lower, then we could expect the market maker sell model, but as of right now I'm looking at it as a market maker buy model. So with that being said, if DXY is going higher, that means EUGU is going to be going lower. Right now I think it's just uncertain point, because we are just range bound pretty much, so you just want to wait, in my opinion. That's why like I don't like Forex. It's like, man, this is kind of ass. No offense to those that trade Forex, but I feel like you're giving yourself a harder time just because you're trading Forex instead of index futures, and that's just how I feel it. That's my stance on it. I'm not going to change that until something becomes super clean in Forex. Like the only very clean setup I saw on EU is like this fair value gap right here, and also this fair value gap right here. I shorted from this fair value gap right here down to this low, and that's it. I just take those swing trades. Happy with it. Smart money reversal range turns into original consolidation. Yeah, essentially. That's what we're targeting. We're targeting smart money reversal to smart money reversal to smart money reversal to smart money. Like, that's just how the market books. Oh shit, we're plummeting. What's going on? Now, if you wanted to take this trade, you could have on the 1 minute, the 15-second, because you can dissect quarters into more quarters. Remember that. In a short right now, where do you think I should be taking partial? So number one, if you're in a short right now, what I would be paying attention is immediate order flow. So I would prefer, like, if I was in a trade right now, I want this gap to stay, like, to get created first of all, and then the first partial would be below these lows right here. Now, another thing you want to be careful about is when I'm in a trade, I'm constantly looking at correlated markets. So with NQ dropping this much, for example, I don't see ES or YM dropping that much with it. And so that's like number one red flag already. And so now I would just be paying very close attention to my trade. In 2 minutes, you want this gap to be created. And once it's created, you're going to want to see lower prices. And that's just what I want to see. In terms of partials, this low is where I would take majority of my position off if I was trading this, because that's all the liquidity right there, like majority of liquidity. And so another thing I'm looking at is DXY. Is DXY right now willing to trade higher? Well, if I'm looking at DXY, we just took a bunch of sell side liquidity. It looks like DXY would be willing to go higher, meaning it's going to let the index futures drop if they wanted to drop. That's another thing I'm looking at. Right, Zach, remember, we're not here to catch tops and bottoms. We're here to, I mean, we can catch tops and bottoms, and that's what I do sometimes, but it's like, it's whenever I catch tops and bottoms, it's not actually catching a top and a bottom, because when you go up a time frame, I'm framing off a continuation play off the higher time frame, whereas on the lower time frame, it looks like I'm catching tops and bottoms, but on the higher time frame, I'm really just catching a continuation play. So you always have to have higher time frame narrative. Super, super important. That's why I put so much emphasis on it. How do you see RTY looks different? How you see RTY look? What does that mean? What is RTY? Yeah, so right now, if I was in a short, I would not be feeling very confident with this kind of price action. Is it left the fair value gap, and within here, I want to see bearishness. So from here, I would drop down and anticipate that this could potentially be an order block right here. This one being formed right here. And so I would go to the lower time frame and just watch 15 seconds, see if we can get some sort of bear structure, because right now, paying attention to immediate order flow, we're immediately respecting bullish order flow as of right now. And so you want to see this bullish fair value gap has been respected, so you want to see it get disrespected, and that would become your inversion fair value gap. Russell, I don't use Russell. This is like Russell 3000 or something like that. I forgot what it's called. So now we can look at this as inversion fair value gap is what I'm paying attention to, and we want to see price continue lower from here. This high right here is a SMT divergence right now, so I'm paying very closely attention to that. Okay, this high should be quote unquote a protected high, and we need to see displacement away from this high. The reason I'm not expecting the bullish PD arrays on the 5-minute to be respected anymore as of right now is because we already met our objective. Oh, that just formed. Honestly, it's like you could, but it's just I'm not really. I would like that to stay open personally. And if we do go back into it, I want to see an IOFAD from here. IOFAD is essentially institutional order flow entry drill, and one of them is just one IOFAD is just means you tap into a fair value gap and you never meet the midpoint of that fair value gap and you just displace away from it right away. Alright, once again, still paying attention to immediate order flow. We have this fair value gap now. We need to disrespect these bullish PD arrays for me to feel bearish again. So far so good. And so now we want to watch how we react to this final one. If we get past this final fair value gap, then I would be looking at this low. I want to see displacement past that low. I'm expecting price to hold here, by the way. I don't want it to go any higher than this, to be honest, because we have this fair value gap right here. We have efficient market structure already, so I don't want to, like, there's no reason for algorithm to spool price higher. $5 trade, that is crazy, bro. Good shit, bro. We like those. We like those. Okay, so now's the moment of truth. We need to see plummet in price. Very nice. Very nice so far. And so if we invert this gap, I'm paying attention to the midpoint right now. How are the candle bodies trading in respect to that midpoint of this fair value gap? So this is where I want to see displacement once we get past this low. Currently, this is something I don't want to see in price. So once again, you can see high resistance liquidity breeds low resistance liquidity. So we can just get a very quick sweep up into here. And if we trade back up here, that would be that 5-minute fair value gap that I don't want to see traded above again. So right here, that line is that previous low that we can look as a quote unquote breaker. Look on the 1 minute. This is last line of defense for me. And now, once again, because price decided to do this, you have to repeat the same process, paying attention to immediate order flow. This fair value gap is being respected bullishly as of right now. My entry is based off of the 5-minute, but I use 15-second price action to manage my trade. Okay, so now we want to see, once again, immediate order flow. So we're inside this fair value gap. We want to see it disrespected. And at this point, because we've been like inside this choppy sideways price movement, this is it. Like, I want to see expansion now, or it's either now or never. And if not, then I wouldn't be comfortable in this trade anymore. You can also pay attention to this fair value gap. It's being respected once again, right? So you pay attention to that midpoint, candle bodies, you're respecting it. This inversion fair value gap has been used multiple times, so we can also pay attention to that. So at this point, I'd probably like close my trade if I was like in a short from up here. I'm just being like, if it was me, I'm not telling you to do that, but that's just how I would feel if I was in this trade. And then this fair value gap, you can, I would re-evaluate in the 5-minute fair value gap. So let's go back to the 5 minutes so it's not so draining to look at price. For a higher time frame PD array, do you wait for the formation or price to react to it? What do you mean by that? Like, oh, what? Oh, you literally just answered my question before I even read it. Like, would you wait for 5 minutes to get tapped into? Yeah, so like in this case, it's like you can, if you're using the model once again, like this is a quote unquote higher time frame PD array, drop down to the 15-second, and then within this this quote unquote higher time frame PD array is on the 5-second, you can look for that SMT divergence and then look for lower prices. So that's also valid. Like that would just be the same setup that I usually take. In this 5-minute unicorn, which time frame should I see market structure to get in? Market structure shift to get in? Which unicorn? In terms of the mechanical entry, I don't see it, but you can look at the swing low as a quote unquote unicorn model if you want. Because on a lower time frame, that is a breaker block. Just wait. Like, patience is a big thing in trading. Be patient. I know it's boring to wait, but it is what it is. Trading is boring. I think that's like really, I don't think there's much else to really touch on. You could also look at this 15-minute balance price range if you want. Like there's tons of things to frame your trade off of. But yeah, as of right now, I am leaning bearish because our all-time high drawn liquidity has been met already. But once again, if a higher time frame objective has been met, then you can expect choppiness, right? So that's another possibility. So if I were to end off the stream, I would say leaning bearish as of right now, can possibly expect choppiness because higher time frame objective has been met. That's what I would say right now. Okay, with that being said, I think that like my trade idea and everything has already been played out. Like my weekly objective has been met already as well. Weekly objective being all-time high again. So coming into this week, we were in a market maker sell model, so I was expecting expansion lower into this target down here. We took out this low too. Once we took out that low, I was expecting bullish price action because we had SMT divergence on the lows here. And so from here, we can look for bullish price action, and we just ran straight up. So this I was not expecting, but I was expecting bullishness. I just didn't expect it to happen so fast. NQ 1 hour, and it's pretty clean unicorn reacting from an hourly fair value gap. I don't see it. This one right here. Yeah, you could say this is the unicorn. Oh, it is an up close candle. Oh yeah, that is a unicorn. Yeah, you could look at that. Good eye. Good eye. I would just be careful because look at this wick right here. This wick is technically a rejection block as of right now. So until we invalidate that, I would be careful. On that note, I am going to hop off now because I have some work I need to do. But I hope this stream was insightful as always, and feel free to join my Discord. I have a free Discord, and then there's also obviously the premium side of things, but premium is 100% optional. If you want to try out the premium side, then there is a free 2-week free trial for around, I think, 30 more people. So if you want to try that, feel free to try it. Otherwise, it's completely optional. And yeah, everybody take care. And if you continue to trade, then be careful, I would say, because a higher time frame objective has just been met. So on that, take care. Once again, good luck with trading.